Hey, this is Matt from InvestiQuant. Today is Wednesday, May 26, 2021. Yesterday, we saw the markets gap up, and then they ended up trading lower the majority of the session. And this is coming on the heels of Monday's 10-day high close. So we had a 10-day high close on Monday. Yesterday, on Tuesday, we ended up closing lower with a red candlestick closing down near the lows of the session. So that's a technical pattern that we can test within Discover here fairly easily. So let's do that here, looking at all four instruments. And we will use an intraday open setup, which means it is getting long at 9:30 a.m. Eastern Time. The exit will be set to the close of regular trading hours, which is 4:15 p.m. Eastern Time. Now, currently, we are trading higher in the overnight session. So for opening filters, I'm going to say we are gapping up. That just means that the opening print is above the prior day closing print. Next, I'm going to describe this price action that we saw yesterday. And that price action is we closed in the bottom 25% of the intraday range. We closed right down near the lows of the session. So I'm going to grab that from the active today section, close in bottom 25% of the intraday range. And then I'm also going to grab this new high section day after down day following 10-day high close. So what that pattern means is yesterday was a down day. That means it closed below its open. It was a red candlestick. But the day before that was a 10-day high close. So you're getting a red candle following that 10-day high close like we had on Monday. Next, I'm going to go into the indicator section, put us in a similar market environment above a 10, above a 200-day simple moving average, and now I can click View Results. And here we go. These are the results based upon entering the market long at the open or regular trading hours, 9:30 a.m. Eastern Time. The exit is set to 4:15 p.m. Eastern Time. When you are gapping up following a day that is a red candlestick that closed down at the bottom 25% of its range, and that came on the heels of a 10-day high close. This is taking place above a 10 and above a 200-day simple moving average. Historically, we've seen this pattern take place in the S&P 77 times dating back to 2003. The Nasdaq has 79 samples to look at here, the Dow 72 and the Russell 71. The win rates on them are all coming in just a touch weak. You've got the S&P at 45%, which means 45% of these have closed above the opening print for the session, meaning a green daily candlestick was formed with this pattern. The Nasdaq, 48%, the Dow, 49%, and the Russell, the weakest of the group, at 44%. And if we look at the average win and average loss, you'll notice the average loss is larger on 3 of the 4 instruments. So the S&P, the average loss is larger than the average win. For the Dow, the average loss is larger than the average win. And also for the Russell, the average loss is larger than the average win. The Nasdaq is the only one that has a larger average win compared to its average loss, and it has a pretty neutral win rate there. So 3 of the 4 instruments, this has been a little bit weaker historically speaking when it comes to the bigger moves taking place on the downside compared to those on the upside. All of the win rates are a little bit under 50%. Nasdaq, Dow, pretty neutral there. ES just a touch weak, and then Russell, the weakest of the group. So hopefully you found that helpful. Good luck today. We'll see you next time.